Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Monday, the 20th of June. Starting off with the FTSE 100 and Thursday's hammer candle, unmistakable really as far as both the intraday and the end of day pattern of recovery that there was, and Friday just confirmed that. We're already trading back above 60.36, which was the line in the sand as far as being the post-March support. So while above 60.36, one would be looking for a full recovery back towards 63, 6400 over the rest of the week, unless something extremely surprising happens. Going on to the DAX, and this also benefiting from the lifting of uncertainties over Brexit. Bear trap rebound from below that 94.84 floor in April, the low 94.32, so really while we're above that, looking for at least a gap fill, top of the gap there, 98.19 from earlier this month, and we clear that quickly over the course of Monday's session. One would expect this market to spike quite sharply towards the top of this triangle. 102.50 would be the, or 10,250 would be the target then. Next market, going on to the American side of the Atlantic here, bounce off a rising trend, uptrend line rather, from February. 17,500, the key level was described as being a key level of support, and that came in on Thursday. End of day close above the 50-day moving average at 17,789. It would be the buy trigger for a fresh leg to the upside, and 18,000 or even 18,500 plus. Once again, unless something very surprising happens as far as the UK referendum is concerned. On to the S&P. Here, the best fit line here is from March, and that runs through 2050. It writes a nice round number. End of day close above the 50-day moving average on Monday should be enough. That's a 2078, should be enough to then take us back towards the best levels of the month to date. Onto the Nasdaq, and here you can see that got the best fit line here from February running at 43.63, and as little as an end of day close back above the 200-day moving average of 44.11 would then suggest that 4,500 plus and filling that gap up to 44.94 would be the target to be looking for. On to the currencies, and for cable we can see that there's a situation where it was a blink and you missed it, moved down towards the $1.40 level, and then massive hammer candle for Thursday. Friday built on that break with the break above 142, and now we're actually heading above the 50-day moving average, just around the 144.37 level. So decent end of day close for the sterling. Dollar above the 50-day line should take us snapping back towards 146 plus very early this week. The early danger sign really probably back below the 10-day moving average of 143.28 as the first place to have your stop loss. Onto the euro. Here we can see that similar situation as far as the rebound here. Clearly Brexit was a stress or a negative factor for the eurozone as well. A support point above the 200-day moving average of 111 is was a decent signal, 111.31, and we're back within this triangle formation. Should be able to hit 114 at least by the end of the week. Stop loss back below 112. Dollar yen. Here the situation just tentatively slowing down as far as the downside here, or the breakdown here that we've had. 103.55 still the line in the sand, but probably one would be more favoured with buying dips towards that level rather than selling into strength after the latest stability and more risk on that we've seen across other markets. On to gold as the last major market here. Consolidation above the 10-day moving average, that's the green line at 12.76. Above that one would still be buying the dip, but one would fear that that might go away given the state of the equity markets and the way that sterling and the euro have come back. But at least while above the 10-day moving average, $1,300 plus is still on the cards. That's it from me. More updates at the same time tomorrow.